But the reason you care as an investor, the reason you would want Lummis to be successful, or Haggerty, is that the institutional capital is like a giant dam of a wall of money that can't invest yet. So it's a spigot of capital in the trillions of dollars. Not a dime of it has been put into crypto yet. Can you imagine what would happen to asset values if they start to allocate?
Canadian businessman and entrepreneur Kevin OLeary, aka Mr. Wonderful, gave a moving keynote speech in the just concluded Bitcoin Miami 2022. OLeary addressed an audience of thousands of sovereign wealth funds, family offices, and other institutional investors. Combined, only a fraction of these big money investors' portfolios will see the crypto industry become a multi-trillion-dollar industry almost overnight. And OLeary is confident that these investors are now ready to invest in the space. While sitting for a brief interview with Kitco's editor-in-chief, Michelle McCory, the Shark Tank star, talks about everything from cryptocurrency regulations, President Joe Biden's executive order on crypto, Bitcoin mining and carbon audits, and other issues that will spur the influx of institutional investors into the industry. OLeary seems particularly fond of the Responsible Financial Innovation Act, a bipartisan bill designed to propel Bitcoin and crypto innovation in the United States. He maintains that the bill, which is being put together by U.S. Senators Cynthia Lummis and Senator Bill Haggerty's bill on stablecoins, will usher in a new era for the crypto industry. Please listen to OLeary's passionate appeal to regulators, policymakers, and investors to rally behind the bills for the good of the crypto space. Also, ensure you hit the like button and subscribe to the channel for more videos like this.
I mean, what was so interesting about this conference, which I've never seen in previous years, was the first day was dedicated to institutional investors, of which the majority do not own any crypto, and yet they packed the room. And so what they're interested in, and certainly I as an investor am interested in, is what are the policy metrics? And there's 5 in the market right now. Yellen just spoke minutes ago. Could call her the 6th if you want, but she's more of the same in terms of the POTUS executive order. So here they are in order of almost how they were brought to market. Number 1, Senator Lummis. She is crafting this massive bill. It's over 600 pages. It's huge. That'll probably be chopped into multiple pieces, but she's inviting everybody to the Hill that's interested, and she's asking for input from the private sector, including investors like me. We're all going there because we want our say. And as a result, it's a bipartisan effort. You don't see anything in Washington. So her policy embraces policy on Bitcoin, stablecoins, but not yet on NFTs. So that's what you know about that vector.
Okay.
So that's not going to address NFTs. Then there's POTUS's executive order. That's number 2. The good news there is he's not outlawing cryptocurrencies. He's embracing it for the productivity enhancement, but he's telling you he's going to regulate it, and you'll have more coming out to you. You've heard it through Yellen in 6 months.
Right.
But buried in that order is a concern about climate change, and that is a direct swipe at the Bitcoin mining industry right now, which is coming under scrutiny for ESG. You know that.
Yes, we've discussed that at length. Yeah.
Yes. So that's number 2. So you're starting to see a theme emerging around ESG, because when you examine the BlackRock letter, if you want to call that, the order, the demand about climate change and carbon, Larry Fink is doing the same thing. He's looking at carbon credits, and he's calling them out as being not a true way to get carbon neutral. But now it gets worse, because another vector that just hit the market in the last 14 days was the SEC memo about requiring carbon audits for every public company. Now that is scary. Just 48 hours old. It's the bill. It's the bill that's coming from Haggerty.
Right. A stablecoin focused bill.
I have this bill. I want to show it to you. 1 page, 2 pages. I have never seen a bill from a senator that's 2 pages. And the reason I think he did this is so that every senator will read this bill.
Usually reams and reams of paper, nobody even looks at them.
I read it. It's genius. And all it says is, let's deal with one important vertical of crypto, stablecoins. Mm-hmm. Let's regulate them in a very simple manner. Let's disclose what's inside them, what backs up the value of them. Let's audit them every month. And let's not let them own any asset with a duration of more than 12 months. This bill on its own, 3970, could revolutionize a multi-billion-dollar industry in the stroke of a pen. So this is the kind of policy that interests me. I spoke with the senator. The idea is to make this an easy decision. I hope he can drive this home. because right now we're in limbo on stablecoins. Now, stablecoins are contemplated in the Lummis bill too, but it's part of a very much larger act. This is a single act. I'm coming to the conclusion, particularly after the feedback from the institutions here at the conference, we'll take any regulation. Give us anything. I mean, we're going to make the assumption, because it's bipartisan and they've taken so much input from the industry, that we'll get something that's workable. It may not be perfect, but the reason you care as an investor, the reason you would want Lummis to be successful, or Haggerty, is that the institutional capital is like a giant dam of a wall of money that can't invest yet. So it's a spigot of capital in the trillions of dollars. Not a dime of it has been put into crypto yet. Can you imagine what would happen to asset values if they start to allocate?
OLeary further states that one way that regulators can entice institutional investors to the cryptocurrency industry in the U.S. is to approve the first Bitcoin spot ETF. The Canadian businessman explains that this has already been done in Canada and it is going smoothly. He adds that many financial regulators worldwide often take the same path as the SEC. So, if the U.S. regulator approves a spot ETF for Bitcoin, other regulators will do the same.
The easiest way to do it would be to do what the Canadians did and simply allow the first American-traded Bitcoin ETF, which could be purchased as a security into mandates that are already set up to purchase securities, like shares. Because they don't have to buy Bitcoin, they don't have to set up a separate wallet. They can simply say, okay, here is a true ETF with the underlying actual Bitcoin,
Right.
and we can simply allocate 50 basis points to a $100 billion mandate. We can buy the ETF. That would be the easiest path to take. My guess is they're not going to allow that. There's multiple applications for that ETF, of which none have been granted.
Just had Cathie Wood's one rejected very recently.
Exactly. And so it doesn't matter which one is actually licensed, because there'll be 10 more that will come immediately. But we're going to need an order from the regulator to allow institutions to be compliant when they buy Bitcoin itself.
And you think the first step towards that order would be the approval by the SEC of a spot ETF?
Yes.
That gets the spigot open?
It starts the spigot open. If that happened, it would be like what happened in Canada. To me, Canada is like a regulatory fishbowl. You test stuff there, and it's working. Nobody's been harmed by that ETF. And now they've got an ETF with Ethereum in it. And institutional clients in Canada and individual investors can put it into their portfolios.
Right.
And they are doing that. Billions of dollars worth of it has been allocated. But we need it to come from the regulator in the U.S. because so much of the regulation around the world in other jurisdictions is based on SEC. And so I like what Haggerty's doing by saying, let's not try and solve all the world's problems. Let's just pick one asset in crypto. The easiest would be stablecoins. That may be the first to move. That would signal, and certainly the fact that this bill is out there would signal that there's an interest. And Toomey was on the air today saying the same thing. It's a good asset. The great thing about getting stablecoin nailed down on a regulatory basis in the U.S. is that it creates a global currency backed by the U.S. dollar. It keeps the U.S. dollar as the currency of reference globally. And I don't know why regulators and lawmakers in the U.S. wouldn't want that. They can do it with the sign of a pen, and everybody would get behind USDC or some other stablecoin, or maybe multiple stablecoins, but they're all backed by the US dollar. And so what I would like to see is the government license 10 stablecoins, just like there's a mutual fund from Schwab. There's one from Fidelity. They compete. I'll buy 4 or 5 of them, get diversity. There'll be slight nuances, slight differences. Maybe the interest rates on lending is slightly different. I just want competition from the ability to innovate and keep it stateside, make it backed by the US dollar, make the policy simple, make it transparent, make it auditable, and make it so that the assets that are underlying are not more than 12 months in duration.
What impact does that have on Bitcoin?
It would advance the value of Bitcoin in the sense they know regulation's coming. You're not going to regulate stablecoin and not Bitcoin. You're going to do both. The whole theme of this conference this year is regulation is coming, and it's a good thing.
During the just concluded conference, Senator Lummis had a fireside chat with Kraken's chief legal officer, Marco Santori. The senator explained that she hopes the Responsible Financial Innovation Act will establish favorable regulation for Bitcoin and other cryptocurrencies in the United States. It's truly a legislative framework that we hope will provide the sandbox for innovation to occur, but also put some regulatory parameters so you all know the rules of the road, Lummis explained. It includes privacy components, consumer protection components, and taxation components. There were concerns about whether Bitcoin and digital asset exchanges would participate in sanctions on Russia, and they have been robust players, Lummies added. For most members of Congress, this has been abstract for a long time. That has changed dramatically in the last 12 months, and part of it is thanks to you all. Lummies also talked about how Bitcoin is helping Ukrainians fight the invasion of Russia far better than any fiat currency has done since the war started. Unlike Elizabeth Warren, Lummies chooses to see the good that the industry has done rather than dwell on half-truths and misinformation. What do you think about OLeary's interview and the crypto-related bills? Be sure to drop your comments below and give this video a thumbs up. Thanks for watching.